Hello and welcome to this June 14th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we are featuring ticker symbol TSL, Trina Solar. This is a $1.15 billion semiconductor company. It is within the technology sector. Taking a look at the chart, you can see back in January that the stock had reached a long-term peak going back really over just the course of about 6 months. You can see the stock had tripled, pulled back, went through a sideways consolidation period for a few months, and then recently broke down again. Volume was very heavy on the selling. But one thing that's kind of gotten our attention here recently is on the last bit of selling, we actually went down, put in new closing lows. But if you notice, the volume had really tailed off quite a bit from what we had seen previously on some of the days selling. So that was one indication that we were starting to see maybe a little bit of the selling momentum begin to wane just a bit. And then also on the most recent low, you can see the MACD had turned back up. So we had a higher MACD reading with lower prices. That prints a long-term positive divergence, also an indication of slowing momentum. So with that, we see TSL on Friday came up, was able to climb back above its 20-day moving average. You can see volume actually has picked up recently over what we saw in the last bit of selling. So that increasing volume, the move back over the 20-day exponential moving average, and that positive divergence that's in play suggests to me that we could see a 50-day test coming down the road. Now keep in mind the 50-day is dropping every day. That's currently at 2168. So it's likely that even if TSL continues to move higher, it's probably going to meet its 50-day moving average somewhere in the middle. Potentially this resistance area near $20 could be a key short-term resistance area for the bulls. So if we're considering to trade this on the long side, what we would do is take a look at maybe this initial area around $19.80 to $20 as a possible area to take some profits. If you break above that, you get up to the 50-day. Clearly we'd be out of the position at that point. We'd want to see whether or not we can climb back above that 50-day. To the downside though, now that we've broken above the 20, we really don't want to go back down beneath that. So the 20-day currently sitting at $18, which leaves us with about a 3% move to the downside potential. So overall, we like the risk reward here. TSL started to show some strength recently after printing this positive divergence, so that was an indication that the selling momentum was slowing. And now as we make this breakout above the 20-day, you can see the RSI also trying to climb back above a key resistance area at 50 on that RSI. So we'll be watching that as well. So overall, I think TSL looks like a pretty good candidate, but as always, we would keep the stops in place. This is not a great looking market overall. Still, we would expect some more whipsaw action. And really, the technicals, the sentiment, and so forth suggest just about anything is possible right now with the market. So that's one of the reasons why we've been playing it close to the vest. Really haven't done much in the way of trading of late, because we simply feel like there's too much risk in the market. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestedCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.